Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
Nice Brent crude oil futures. Well, there's actually quite a lot going on here. It's a second bearish black crow yesterday after the previous session's reactionary bearish harami. It was the lowest low and low close since early December last year. The market was once again capped overhead by the familiar underside of the bright green small February based bear channel, currently 73.77 to 77.03, as well as the well highlighted 50% absolute Fibonacci line at 73.73. The market penetrated and closed below the previously highlighted congestion between 71.75 to 72.29, coming to a halt at the next congestion below, which is the May 2023 low at 71.29. which happens to be coincident with the upper trend line, currently 71.12, the old mid-October 2024 to very early January 2025 descending triangle pattern. Interestingly, we are so far along this descending triangle that the lower trend line is not far away below, currently at 70.67. Now further down is the March 23 low at 70.13, and then the significant dark blue lower time, currently at 69.48 of the broken but now seemingly repaired April to July 2024 bearish shift pitch whoop. Has been a showrunner for this market since last summer. Now, I've indicated that we have a small bright green bear channel overhead formed over February, and that this could be a possible bearish half hesitation. Well, today I'll further support that with a potential target X for such a pattern down in the 69.25 zone. Now, one further point I wish to discuss, and that is that I have been looking at the action since early September last year to date, including the head and shoulders continuation pattern last year and the peak in January that we saw, and I'm considering looking at them as a possible, if lopsided, bearish cat's ears pattern. This would be a significant bearish pattern if it should come about or would come about. For the moment, I'm just still considering it. Now, so far today, a lower open for a fresh move down below the support of the lower trend line of descending triangle, though we are not yet well established below it just yet. Spot gold. A reactionary combined bullish engulfing pattern and bullish open and close bullish and close white Mariposa yesterday after the previous session's second bearish black crow. The market turned back up towards the broken and now possibly repaired bright red upper time, currently at 2900, of the early September to mid-November 2024 bullish shift pitch whoop. Overhead we now have the 50% projected Fibonacci line at 29.17, as well as, I suppose, the broken green lower bull channel line of that late December 2024 to end of February 2025 bull channel. Overall, this is a strong reactionary move back up after last week's weekly key reversal down seen at the top of the market. Now, so far today, a dip down to the lesser Fibonacci line at 28.87, seemingly to gather some fresh ammunition before a fresh attempt higher, just over the 50% projected Fibonacci line, but seemingly getting capped by the broken green lower bull channel line, which is somewhat surprising, I suppose.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.